Welcome back to the Lobster Talks podcast, where we dissect Y Combinator secrets. Today, we're diving deep in a story of exponential growth and how a unique investment strategy can unlock immense potential. Our focus today is Baubap, a Y Combinator startup from Summer 21 batch that's disrupting the financial landscape in Mexico, reaching millions of underserved individuals with their innovative approach to microloans. Nowadays, Lobster Capital only invests in the US, but we're going to break down the investment that I made before Lobster Capital in Baubap, exploring the key elements that made this deal a success, the unique data-driven approach they used, and the lessons learned for investors looking to capitalize on emerging markets. Buckle up, because it's a story that you're not going to want to miss, and let's get started right away.
Hi, Gabriel. Thank you for having me. I'm excited to dive into this conversation. So, can you give us an overview of your investment in Baubap and what is Baubap?
Sure, and thank you as well for being here and being the interviewer here. So Baubap is a YC company, as I've said in the introduction, doing microloans. Their idea is very simple. There are a lot of people in Mexico who, for some reason, would be very happy, very glad to have a little bit of extra cash at the end of the month. Small amounts of money between $50 and $500. And so the idea of the company is to lend them that money through a mobile app. That's not really new. It's been going around for a very long time. What's really new with Baubap is two things. One, it's a very, very quick and fast process from your mobile phone, and you can ask for a loan and it will be given to you in a couple of seconds, in less than 2-3 minutes. So that's one thing that's really new and awesome for the end user. You get the answer right away. Could be a no, but at least you have the answer. It could be a yes, very, very quick. The second innovation is that it's very easy to lend money to people. It's much more difficult to get that money paid back. And especially in Latin America and Mexico, for example, the delinquency rate is extremely, extremely high, meaning you lend money to people, they just don't pay the money back, and the company takes a loss. And so Baubap, we're going to go deeper into that, but they came in, they created an innovative algorithm and a lot of new data points to predict much, much better than anyone else whether or not people are going to pay back. And so this meant that they had a much, much lower delinquency rate or a much higher payback rate, which allowed them to be profitable from the very beginning. Unlike most competitors, there's a lot of people doing this in Mexico and Latin America, but they're losing a lot of money. So that's the real innovative, interesting stuff about Baubap, is they have this innovative way of knowing in advance if you're going to pay back or not. So they're making money on every loan that they issue.
That's interesting. Can we dive deep on that algorithm that they created?
Yes, absolutely. So that's one thing that really fascinated me with Baubap when I met them, is they realized is they take most of the data of people's phone and they're able to have a decision from that. So they're, with their users' permission, obviously, access all of the data from the phone. And by the way, after they make a decision, the data is deleted. So, it doesn't stay, they don't keep the data forever, but they access everything, your location, your text history, your emails. And so they can see where you've been. Have you spent a lot of time, going to the office, or do you spend a lot of time in the bar, drinking and spending your money? Are you texting a lot of people saying, hey, I need money, lend me money? Or do you get texts from people who say, hey, you still owe me money, when are you going to pay me back? And then you see this person clearly doesn't pay back a lot of its money. Or do you see the person really needs the money and says to his wife or friends or children, hey, I'm not sure how we're going to afford food, let me try Baubap. This is something that they really need the money for something important. So accessing all of that data, location, text, history, call, et cetera, and building a model on top of that of predicting whether or not the person is going to pay back. And, I don't have all of the exact weights of what they take into account. This is proprietary and secret. But basically, with all of this, they found a solution, and they showed that the delinquency rate was much lower than everyone else. That's when I met them. when I
Mhm.
decided to invest. I
Mhm.
haven't mentioned, but obviously they're doing a killing. Their numbers are insane. They crossed $100 million in revenue in the last few months, which is absolutely insane when you think it was a very, very small business started in around 2020, went through YC in 2021, invested in seed, and now they're a major, major fintech player in Mexico.
Yeah, as you mentioned, Baubap had a rapid growth and the traction is amazing. And how does this validate your investment thesis on investing solely on Y Combinator startups?
Yeah, that's an awesome question. I mean, so first of all, my investment criteria are numerous and complex, but there's one thing that I over index on, and it's early traction. And that's because startups are
Mhm.
all about execution. It's all about execution risk. But if you have strong early traction, it means you are executing. It means you know how to build, you know how to sell, you have product market fit if people are buying. And so you've sort of you've solved most of the early problems of a startup. This number 9 startups out of 10 fail. That's usually in between the idea and the traction. Once you get traction, you've already solved a lot of things. Now, it doesn't mean it's a guaranteed success every time, but you've already, crossed a lot of difficulties, and you're already a good halfway there or 3/4 there or something. So that's the number one thing I over-index on. And so not every YC company has traction, but many do. YC is actually very good helping startups get to traction very quickly, and that's part of the design of the program. That's only 3 months. After 3 months, you have the demo day, you're pitching to investors. And so you want to have something to present to investors. And one of the best thing that you can present is numbers. You can say, hey, we have X MRR, X ARR, et cetera, et cetera. But many people think that YC companies are too expensive. And so that's something I get pushed back on very often. And in some ways, it's true. So most YC companies are priced the same, whether you have traction or you don't have traction. So that's the big difference. Within the same batch, you have the top 10% that have very strong early traction, and you have the bottom almost 50% that have very small or non-existent traction. And they're all priced the same. So yes, it is true that for a company with no traction, just because you put the YC name on it, if it's a 15 to 20 million seed or even 25 million seed, that happens, it is too expensive if it's the bottom 50%. But in the case of Lobster, I'm able to speak with the top 10%, the companies that have the most traction. Then, the price is much less important than the growth and the speed and the pace at which they're growing. So coming back to your question, Baubap is a great example. The valuation when we invested was 40 million. It was 2021. Obviously, it was a different time than what we see today in 2024. But even at the time, it was quite rich. It was quite expensive, a 40 million seed. But they were having an insane traction already, and they were doing 3 million in ARR. So even by today's metrics, 3 million in ARR, growing quickly, 40 million valuation. If you divide 40 by 3, that's 13 times ARR. That's, let's say, decent. But a lot of people at the time, so I did invest from Lobster. It was in my old days, I was running an angel syndicate. So you send the deals to your angels and they decide to invest or not. A lot of people at the time said, oh, it's too expensive, we're not coming in. Nowadays, now they're crossed 100 million in revenue, right? They never had to raise again because they're profitable. So there's zero dilution. And so because they never raised, we don't have a latest valuation. We don't know how much they're valued at, but you could actually value them on the revenue multiple from the NASDAQ. If you take, there's companies in the NASDAQ doing in the range of the hundreds of millions of revenue, and you can just look at the revenue multiple for the parallel valuation. It's like the price earning ratio, but it's a revenue multiple. And so they would be valued somewhere around 1.3 billion conservatively. It's difficult to say. Being conservative, let's say, and they would be valued around 1.3 billion. So if you divide that by the 40 million that we invested in, that's a 32x in 3 years. We invested in summer 21, we're in summer 24. 32x. And of course, on paper, when I calculate my IRR and TVPI, etc., I don't use that because the standard in the industry is to only use the multiple when there's an actual external fundraise. All of this to say that it does validate Lobster's strategy extremely well to not focus so much about valuation. It does matter. I'm not saying it doesn't count at all, but not focus too much on valuation, but to actually focus on growth and traction and trajectory. And a company growing so quickly that has such an unfair advantage, they have their own algorithm that no one else can have and copy. And it worked out extremely, extremely well in that case. And remember, in some cases, it might not work out. In some other cases, it might not work out. That's part of the game when you're investing in startups. The winning bets pay for the losing bets. And so even if I make 3, 4, 5 other bets that do end up not working or being too expensive, Baubap, for example, pays for everyone else because already today it's a 32x. And of course, it's going to keep increasing. It could very much be 100x in the coming months or years. It's pure speculation for now, but the trajectory seems to show that it's going into that direction. That's the idea that I have with Lobster. That's why I'm not too valuation sensitive. And that's why Baubap really validates that thing. And it's not the only example. It's the company we're focusing on today. Hopefully we can, record other episodes on other companies, but it's one of the numerous examples that shows you that valuation is less important, in my opinion, than traction and growth trajectory.
That totally makes sense. So, in your opinion, how does Baubap's commitment to customer education and financial literacy contribute to their success and their long-term sustainability? Like, how important are factors like corporate social responsibility is in Lobster Capital's investment decisions?
Yeah, that's absolutely awesome that we talk about this. Something really interesting with Baubap is the interest rate that they charge, and it's fairly high. So those loans, $50 to $500, so it's 500 to 5,000 pesos, roughly. Their interest rate. So you pay them back usually between 30 to 90 days or 30 to 60 days, short-term loan. But the interest rate is monthly. But if you look at the annual interest rate, it's something like 120%, something like 10% per month, which seems insane if you look at it from the outside. I'm from France, where you could borrow for 4 or 5% per year. In the US, it's a little bit higher, but you can easily borrow for 8, 10, 15. Credit cards is on average around 17% per year, which is already high. And they are at 120%. So you might be thinking that's totally irresponsible, that's totally exploiting people, that's not socially responsible, etc. So that's actually not, and a bunch of people at the time didn't want to invest for that reason as well. That's actually not true. So one is they are the cheapest on the market. So it is expensive, but every market is different. Sorry, the US seems expensive compared to France. Mexico seems expensive compared to the US, but each country is different. And it actually has to account for the big fraud, for the big number of people who don't pay back. So even Baubap, with their amazing numbers and algorithm, and they have, I think, the lowest, charge, like unpaid rate or delinquency rate of the region. Even them, I think by memory, the delinquency rate is between 10 and 12%, which is extremely high. If you look at the US or Europe, it's below 1% or between 1 and 2%. So still it's high. And so they have to factor this in. But most importantly, they're one of the cheapest among the competitors. So they're actually lowering the price. And also, it's always more expensive when you pay monthly an actual yearly payback. You pay back in 30 days. So yes, you might pay back 30% in 10% in 1 month, which amounts in total to 120%, but you only pay the 10% because it's a shorter term. For many people borrowing $50 and you pay back $55 the next month, that's totally okay. So I just want to mention that it could be something, could be interpreted like, hey, those guys are charging too much. They're actually one of the cheapest of the region. So that's one thing. The other thing that you mentioned is financial education. Yeah. One of the reasons that Baubap also has a great payback rate is that they're not just, saying, hey, we give you money, bye-bye, pay back, and that's it. There's a whole financial education part of the app where they teach you, okay, why did you need to borrow money? What's the problem? You have a salary every month, but maybe you didn't manage your money correctly. And let's learn with Baubap, and it's entirely free. And give you an example, during the months of COVID and during the months of lockdown in Mexico, some people, the first payback they would make before their car or house or whatever would be Baubap, because they're so thankful for the education, and also because Baubap is keeping the relationship human. They're never mean or aggressive or threatening, like, hey, if you don't pay back, we're gonna prosecute you or something. It's always human. It's always trusting people. Hey, we know it's not easy. We know you might be struggling, but please, we'd love to get that payment done. And by the way, here's a video on how to, become better, get a better financial education and don't fall into the same traps next time, etc. So this is really something that Baubap has at heart. And it's fascinating because it's both good for the world and just the right thing to do and just a positive thing to just be nice, but it actually translates into better results as well. It's both. They don't do it by interest. They do it to help people, but it actually translates to better results. So that's super important. And so then to answer your last question on how important it is for Lobster, I started Lobster because I want to help founders create a better future. I believe capitalism is one of the best ways of innovation for the human race in general. And Silicon Valley is one of the best places to do that. I've backed people building a very different types of very, very interesting stuff. Some founders I don't invest in, but I still help because I think what they're doing is amazing. On this pod, we've had people, mining asteroids, and people, coaching top CEOs, and a lot of, so many different things, and people helping what's the workers getting paid in New York City, et cetera, et cetera. So, software can really have an impact just making people's lives easier. Yeah, those things are important. Obviously, we want to make money for our investors, and that's the goal of Lobster. But I believe, just in like the case of Baubap, the good that you do, and you just do because it's morally right, can actually translate into good results. And so that's how I try to live as well, how I try to live myself.
Yeah, I love that. Sometimes capitalism has a negative connotation, but if you look deeper into it, there are positive things. Yeah, I love that.
For sure.
So what did you learn from Baubap's experience with Y Combinator? Did you see specific elements of YC methodology or advantage that contributed to their success?
Yes, absolutely. And, again, I've interviewed, 25, 30, whatever startup founder here on the pod. And all the time I ask them, what did YC bring you? Would you recommend that? Was it positive? And everyone says, yes, YC is great. It's a bunch of other people. It's some sort of a peer pressure to go as fast as possible. And there's this thing, it's written here somewhere in my notes, that you keep hearing about for a lot of amazing people, Steve Jobs, Elon Musk. Anyway, I don't find the page, but it's somewhere in my notebook. It's a maniacal sense of urgency. It's you have to build, ship, and always be in some sort of a huge hurry that you gotta do this yesterday and gotta go fast. And that's how I try to work as well. But I really think YC really imprints this in you. And after YC, sadly, some companies are not able to stay with it, but most are able to stay with this because they also stay, together in group, their YC batchmates, etc. Talk together quite often, etc. This really, really was the case for Baubap. I mean, the way they shipped products and the way they move and the pace is absolutely staggering and quite impressive. I get their reports and it just goes so quickly. And the growth and the ambition, there's so many companies you could double and double and double. And you're like, okay, that's it. We're big and we're going to stay there and consolidate and make sure, we back everything. They're so hungry. When they went from 3 to 30, we're like, whoa. And then they're like, oh, we're going to 100. And we're like, whoa. And they did. And now they're already somehow way past 100. And so it's like, wow, it's still going. Like, where are they going to stop? They're going to be 150 very soon if they're not already. And then it's going to be 200. And I don't know, it's going to be maybe 1 billion. I don't know. Like, we're waiting for the other shoe to drop. It's never a given that a company, some problems could happen. That's the life of a startup. But for now, they're just keeping this thirst and this hunger and this pace of execution that's so impressive and keeping everything together. When your company goes from 3 to 100 plus million in 3 years, trust me, there's a zillion things that break and that go wrong, and it's extremely, extremely difficult, but they're still here. So that's super impressive. And that's, I'm sure, they got from YC. Just the pace and the acceleration. That's something, and they're not the only ones in the world, but you see a much, 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 much higher concentration of those types of people in YC, at YC, outside of YC.
How important is the relationship with Y Combinator when evaluating potential investments? Does it give you confidence in a company's future prospects, and does it influence your investment decision making?
Oh yeah, tremendously. I mean, so right now I've chosen to focus exclusively on Y Combinator companies, and it's a choice that I didn't have to make. I could be investing out, elsewhere. I'm making that choice because it gives me tremendous confidence. So there's a number of things. One, it's a self-fulfilling prophecy that the most talented people, they want to go to YC because it's the best. It's like Harvard. Are people from Harvard amazing because they were created amazing by Harvard, or is it because already the smartest people, they wanted to go to Harvard? So that's one thing, right? The most ambitious founders in the world, they want to make it to YC. That's one thing. Second, it's more difficult to get into YC than to get into Harvard. YC selects less than 1% of people that apply. So the selection is extremely, extremely, extremely high. It's very, very selective. And another thing is, it gives me tremendous confidence to invest in them because I know they're the best of the best of the best. They're already the top 1% of their field. And then on top of everything else, on top of that, the program is very, very intense. And for 3 months, they teach them a lot of things, but I think the biggest thing they teach them is traction. Do things that don't scale, talk to your users, to your customers, and just build, and ship, and again, have a maniacal sense of urgency. And so you've got the greatest people who want to apply, and then they're selected, and then they're coached and just trained to become the best founders. And also they get, access and speeches from Brian Chesky from Airbnb, and from the Collison brothers from Stripe, and from Paul Graham, who comes and speaks, and from Gary Tan, and from all the group partners, Michael Seibel and Dalton Caldwell, and all of them give talks, and so many huge names in Silicon Valley. I think Sam Altman goes there almost every time and talks. When you have those people face to face, like they're giving you a talk just for you, and then you can go hang out and ask Sam Altman your questions, like that's pretty huge. That's going to give you, not that it does everything. I'm sure, there's some very successful people who never talk to Sam Altman, right? But of course it helps. And you're surrounded with other super talented people as well. All of this, you pick random, it's already a much better startup than everyone else. And then, like I was saying earlier, I have my own set of criteria. I select and handpick what I believe is the top 10% or top 5%. Actually, my investment rate in the YC batches is around 2% of the batch. So, they have a 1% selection, and then I select around 2%. And so that's 2% of 1% is 2 out of 10,000, I believe. That's 0.002%. Anyway, or percent, whatever. So the selection is huge. So I add my own filters on that. And again, it's a lot of things: unfair advantage, team, etc. But I over-optimize and overemphasize on early traction because it takes care of all of the execution risk. So with selecting in YC plus my own criteria, yes, it gives me tremendous confidence into the deals that I select and invest into.
Based on your experience with Baubap, we have talked about your investment criteria, but how can investors find opportunities like investing in Baubap and maximizing their chances of success?
There are multiple answers. The answer to the question we just had before is if you invest in very talented people with an unfair advantage, an early traction, a scalable business. So if you take all of those components and you invest it the same way, then you have amazing chances and odds of success. Another way of answering this, probably one of my favorite way, would be you could invest in the top YC company. That's exactly what I'm doing. Now, as our listeners probably know, investing in the top YC companies is extremely difficult because there are a lot of people who want to invest in the top YC companies. We're not the only ones. One of the advice I could say is to go through a fund that has access to those top companies. So, Lobster Capital is one of them. There are others, but if you go through a fund that has demonstrated in the past that they're able to invest in some very, very high profile performing YC companies, then this can give you access. And in some funds, it can even give you access to co-invest. So your ticket in the fund is your ticket to co-investing. Again, that's the case for Lobster. So this could be a way if you don't have that access. Yes, getting access to the top YC companies might prove difficult and might not, depends. But that's how I could frame that. Or you can just do it outside of YC and go with the same criteria. But YC is an asset class of its own. 5 to 6% of every single YC company that ends up becoming a unicorn over $1 billion in valuation, which is an insane, with around 39% of YC companies that end up raising Series A, almost half, which is again a very, very high number. So all of those things point to the fact that YC is a very, very good asset class. Again, not always easy to access, but there are some ways through other people like funds. So this is how I would say to maximize your odds of investing in the best startups.
To the listeners, I hope you took notes of those things.
And this concludes our chat for today with Eve. Eve, thank you so much for being here and asking me all of those amazing questions around Baubap. Thank you to all our listeners for tuning in. Don't forget to subscribe and rate us on every podcast platform. And on YouTube, you can watch this video on YouTube if you're listening to the pod. See you next time for the next podcast. Bye, everyone.